Hello everyone, welcome to the Stock Trading Tutor channel. In this video, we'll be seeing how you can use the Ultimate Oscillator indicator for successful trading. So we'll be learning the basics and especially some of the explanation from the Money Controls website. I'll give you the link for the specific article and then we will apply this oscillator, this indicator on the chart using Antweb's platform for better understanding. So let's go into the topic. First, let's see what is an ultimate oscillator indicator. So this is an indicator that moves between 0 and 100, providing insight into the weakness or the strength of a stock. So it combines short-term, intermediate-term, and long-term price action into one oscillator and attempts to give overbought and oversold readings, potential buy and sell signals, and confirmations of price actions as well as divergence that might warn of future price reversals. So it's used in various capacities, including overbought or oversold signals, momentum confirmations, and providing trade signals. So here an example is given of the Nifty daily chart. So here is the candlestick chart and the ultimate oscillator. So as you can see, there are three specific lines going through the indicator itself. One is the 70 line, the 50 line, and the 30 line. So let's see, the indicator is useful for technical analysis because it takes more standard momentum oscillators and adjusts the calculation in order to strengthen a common weakness among them. It becomes most effective when confirming signals or conditions identified by additional technical analysis. So I guess you should it's better to use ultimate oscillator with additional indicators. So let's look at the formula used. So first there are three steps for calculating the ultimate oscillator. The default parameters are 7, 14, and 18. So let's go into the chart and apply this. So here I've opened the HDFC Bank's chart and according to the settings itself, it is already in 7, 14, and 28, which is the default. The overbought is 70 and the oversold is 30. Okay. Now, before calculating the ultimate oscillator, two variables need to be calculated, the buying pressure and the true range. So the buying pressure is the closing price minus the minimum of the lowest between current low or the previous low. Then you need to calculate the true range, which is the maximum between the highest between current high or the previous close minus the minimum, that is the lowest between current low or previous close. Then the ultimate oscillator then uses these figures over three time periods for the 7 period, 14 period, and 28 period. So the ultimate oscillator's formula is also given. The good news is the ultimate oscillator is given on most trading platforms such as TradingView and MetaTrader, in free online charts also such as investing.com, stockcharts.com, and Yahoo Finance. So if you can't access the Antweb's trading platform, you can open these free charting online charting sites such as investing.com, stock charts, and Yahoo Finance. So let's see how the indicator works. The buying pressure and its relationship to the true range forms the base for the ultimate oscillator. So the best way to measure buying pressure is simply subtracting the close from the low or the previous close, whichever of the two is lowest. This will reflect the true magnitude of the advanced, hence buying pressure. So the ultimate oscillator rises when the buying pressure is strong and falls when the buying pressure is weak. So the ultimate oscillator measures momentum for three distinct time frames. Notice that the second time frame is double that of the first and the third time frame is double that of the second. So now let's see how we can use this. The buy signal occurs when there's a bullish divergence. The divergence low is between 30 on the indicator and the oscillator, then rises above the divergence high. So the divergence low is 30, so this is a bullish divergence. So when it crosses this level 30, crosses below the level 30 and then rises above the divergence high. So let's look at it here. So in this specific chart we have oversold signals. Let's see overbought. Here we have in the Yes Bank's chart, we have the 1 hour candlestick chart applied and the ultimate oscillator. So in this right now, the Yes Bank candlestick chart is currently in the bullish signal below the 30 level. So buy signals occur when there's a bullish divergence. The divergence low is below 30 on the indicator, then the oscillator then rises above the divergence high. So let's look at the example itself. Here are the overbought levels and the oversold levels. And when it crosses the 50 line up here and it's close to the oversold levels, it's the bullish divergence. When it crosses above, here we have the breakout, and then on this side here we have the bullish divergence because it has gone up below the 30 level, then come back towards the 70 level. It's close to the 60 mark here. So here is the bearish divergence. So like all technical indicators, it is important to use the ultimate oscillator in conjunction with other technical analysis tools. So if you're getting a little confusing signals like this here and here, as you can see, this doesn't give a solid buy or sell signal here right now, as it's still hovering here and there's no divergence exactly. So trading technique. So the problem with many momentum oscillators is that after a rapid advance or decline in price, they can form false divergence trading signals. So, for example, after a rapid rise in price, a bearish divergence signal may present itself. However, the price continues to rise. The ultimate oscillator attempts to correct this by using multiple time frames in its calculation as opposed to the one time frame in most other momentum oscillators. So, the center line 50 is important level to watch. The ultimate oscillator moves between 0 and 100, which makes the 50 the midpoint. Usage of trend lines and momentum moving average is the most effective way while trading with ultimate oscillator indicator. So it's better to apply the ultimate oscillator, and then moving average and trend lines is a good combination to apply along with this specific indicator. So moving average and ultimate oscillator together are used to develop trading strategies. So let's see some of the strategies given here. So this is the Axis Bank daily chart. In this example, here we have the ultimate oscillator. So here let's look at the buy signal, how it is created. The buy signal oversold area. The ultimate oscillator must have reached the oversold status, which is below 30, before a buy signal can be given. When the price makes a new low, but the ultimate oscillator makes a higher low. So let us also apply Axis Bank here to see if this still applies now. So here we have the buy signal. The ultimate oscillator must have reached the oversold status below 30 before a buy signal can be given. When the price makes a new low, but the ultimate oscillator makes a higher low. Let's look at that. So the it hasn't crossed both the indicator lines. Let's leave this. Now let's use this. Here in the Yes Bank, we have some divergence here. So for the bullish divergence, when the price makes a new low, but the ultimate oscillator makes a higher low, and then the ultimate oscillator breakout. When the ultimate oscillator closes above the highest high during the bullish divergence. So here we have the divergence because it's making a new low here. but it's not in the oversold levels. It's a higher low. This is a bullish divergence. So let's look for that here. So here is one of the divergence. As you can see, it's quite small. So here is it has crossed the oversold levels, but here, and as you can see, the candlestick chart has made a new low, but the ultimate oscillator is still, the low is a little bit higher. So that is a bullish divergence. So next, let's look at the exit signals once after the entry point. So one can use multiple ways to book profit and exit, like the ultimate oscillator near 50 or the ultimate oscillator near the oversold levels 30. Next, let's look at the sell signal. So sell signal overbought area. The ultimate oscillator must have reached the overbought status before a sell signal can be given when a price makes a new high but the ultimate oscillator makes a lower high. So as we can see here, it has already touched the near the 70 level, so it's at the overbought levels. But the candlestick chart here has made newer highs, but the ultimate oscillator hasn't made shown those same kind of movement. So this is a bearish divergence, and here we have the breakdown. So let's see. The ultimate oscillator breakout is when the ultimate oscillator closes below the lowest low during a bearish divergence. So here, the chart is in a higher trend. It's slowly going down, and we can see that the indicator has hit the oversold levels here, even though the levels aren't shown that low. So let's look at that. So this here is currently a good sign. So as we can see, it has the ultimate oscillator here has peaked at the HDFC's level, but then this chart has made a little more higher, and the stock and the indicator hasn't kept up, as we can see. So here we have a bearish divergence. So, so as we can see, this is how we can use the ultimate oscillator. So to conclude, the ultimate oscillator is an overbought and oversold technical indicator that may offer potential buy and sell signals. So by using multiple time frames and weighing them accordingly, the ultimate oscillator aims to cut down the false signals. It's best to use the ultimate oscillator along with extra technical indicators such as moving average and trend lines. So I hope this has been helpful. Thank you for watching this video. For more videos on stock market and trading, please subscribe to this channel.